Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the most bullish scenario, which is a multi-1-2, after which we expect strong continuation to the upside. The most common target for a wave 2 is between the 0.5 and the 786 Fibonacci, taken from the start to the end of your blue wave 1, giving you a target between 64.2k and 61.1k. The 0.382 is an uncommon target for a wave 2, but a target nonetheless at 65.4k, and a level you do not want to see hit is the 886 at 60k, very rare for a wave 2. The invalidation for this scenario is price taking out the low at 58.8k, and what we're looking for is price to eventually take out the high. Now, a second bullish scenario has a similar result. Here, we're also looking for price to eventually take out this high. However, what happens afterwards is very different. In the multi-1-2, you're looking for strong continuation to the upside, an impulse. While here, in this scenario, we are looking for another move to the downside and only later move towards the upside. So what we're looking for here is a diagonal. We have a 3-wave in 1, in 2, in 3, in 4, and what we're looking for is a 3-wave structure to the upside in a blue wave 5 to then finish the green wave 1, as this then becomes a bigger diagonal structure, leading diagonal in a wave 1. 1, 2, 3, 4, 5. Look for a 3-wave corrective structure, which most commonly in a wave 2 after a leading diagonal is a deep retracement, and then you want to see continuation to the upside. As long as price does not take out this high, the invalidation for this scenario is taking out this low, again at 58.8k. And what we're looking for here locally is price to take out this high but not move above 72.8k, as that would be the invalidation, also another invalidation of this scenario. And the reason that 72.8, almost 72.9k is an invalidation is because your wave 5, your blue 5, is not allowed to be longer than your blue wave 3. And if you take a trend-based fib extension from the start to the end of 3 to the end of 4, this 1-to-1 is the level that you get on your chart. Now, with this in mind, we also have to be aware that wave 5 has to be a 3-wave structure, a zigzag family structure, and the most common target for a wave C is between the 1 and the 1.236. Now, if you take a trend-based fib extension from the start to the end of A to wherever your B is going to end, then basically your B would need to move all the way down to 61.1k for this 1-to-1 target for your white wave C to be below the invalidation, 72.8k. Isn't that interesting? Because you can see if price would retrace to 62.3k, still quite a deep retracement, no? The common target for your C, starting with the 1-to-1 here, is equal to the invalidation. It's not really what we want to see. Now, a rare target for a wave C is the 0.618. And you can see that even with the low that we have here at the moment, the 618, rare target for C, is still below the invalidation for your wave 5, 72.9k. It's just that it is a rare target, right? So yes, we can keep an eye on the 618, but preferably you see at least a bit of a deeper retracement in your white B before another move to the upside in your C. So the price action between this diagonal and a multi-1-2 is quite similar. However, what happens after taking the high is going to be very different. And of course, if price takes the high, we're going to be observing what price is doing locally to know the probabilities for the multi-1-2 versus the diagonal. Now, this is then a bearish scenario. Got 2 bearish scenarios here for you. They have lower probabilities though than the bullish scenario, and I'll explain why. Now, what you see on my chart here is a flat, or actually 2 flats. I color-coded them, a green as well as a blue flat. The green one is A, B, and then you look for a wave C below 52k, and then A, B, C, and then move below a 59k. Now, A flat is part of a bigger WX, and then you have your wave Y, with your wave Y then being a flat structure, or alternatively you're looking for a WX, YX, and then a Z with your wave Z being a flat structure. It doesn't matter, because in the end you're looking for a flat structure, which is basically what I have on my chart. However, if this here is the high of your wave B, right? This is the common target area of your wave B. So we hit the common target area, perfectly fine. But if this is the high of your wave B, then you need an impulsive structure to the downside, because a wave C needs to be an impulse, 1, 2, 3, 4, 5, or a diagonal, 1, 2, 3, 4, 5, and then you move back towards the upside. So in other words, it has to be a motive wave, an impulse, or a diagonal. But based on the lower time frame structures, the probabilities at the moment are higher that what's happening here is a corrective structure, not an impulsive structure. The first move to the downside is very much a three-wave structure on the lower time frames. And in the live stream later today, around 2:30 p.m. Central European time, we will zoom in to the low time frame as well. So make sure to jump in to that live stream. But at the moment, locally here, very much higher probabilities. The first move down is a three-wave structure, which means that the only bearish scenario locally would then be a diagonal, 1, 2, 3, 4, 5, but your wave 3 at the moment already has some problems as well. So it's not a high probability scenario at the moment. Probabilities are higher that this here is a corrective. Now, of course, it's no problem if price then still takes out this low, but the probabilities are lower. You're going to move below these lows over here because the probabilities are lower for a wave C impulsive structure. Probabilities are higher for corrective structures, which is what you want to see in the two bullish scenarios. Now, finally then, the most bearish scenario, also the lowest probability one, is a wave 1 or A being an expanding diagonal. 1, 2, 3, 4, 5, expanding diagonal, very rare, never preferred unless everything else fails. And then a three-wave corrective structure in 2B. Now, in this case, we then have a WXY inside 2B, which is a double zigzag. So you then need to have an ABC correction and another ABC to the upside, WXY double zigzag. Now, your wave X hit the 0.7, lowers the probabilities for a double zigzag WXY, 0.7 taken from the start to the end of your wave W. In a previous live stream, we also were thinking about, can we think about anything else here besides a WXY, where X then hits the 0.7? And we had the idea of the potential ABC or ABC, with then wave C being a 1, 2, 3, 4, 5 wave ending diagonal type of structure. The problem is that in a wave 4 of a diagonal, you want a zigzag family structure. And at the moment over here, even though the first move is a three-wavy, the follow-up is messing up the probabilities for a wave 4 in a 1, 2, 3, 4, 5, tada, and then have this as a C and then an A, B, C structure. So therefore, we got the WXY on my chart again for a 2 or B. Nonetheless, it's low probabilities. After 2B, you want to see impulsive structures to the downside. And as explained, currently on the lower time frames, probabilities are higher that this is corrective. There's many corrective structures. There's no problem for price to still take out that low at some stage. But the probabilities are higher at the moment. This is corrective, right? Not impulsive, which doesn't support this scenario, as you want an impulsive structure to the downside from the high. If we then look at the bullish CVD divergences, then we had bullish CVDs over here, which already played out. Price took out this high and also took out this high here. And you'll see that on the 1 hour, we again have bullish CVD divergences here. So you can see here the green line, higher low in price, lower low on the CVD, which is the bullish CVD divergence that I'm talking about. Locally, we also had some bullish CVD divergences here, right? Price has been moving sideways, but also, especially on Sunday, started to move towards the upside. Bullish CVDs locally have played out as well in confluence with the bigger 4-hour or 1 hour bullish CVD divergence. And if I zoom out to the 4-hour, then you can see the previous bullish CVD divergences that we had here. Higher low in price, lower low CVD, higher low price, lower low CVD. And now locally on the 1 hour, we have this one over here. right? And then locally on the 15-minute, 1-hour time frame, the bullish CVD divergences already played out. So that is also supporting the probabilities that I will show you in a second. If we then look at the news, we do have some news today, not today, but this week, Tuesday, October 29th. So that is tomorrow, 4 p.m., Wednesday, 2:30 p.m., Thursday, 2:30 p.m., and then also on a Friday, 2:30 p.m. So it's going to be an interesting week. I'll make sure to be live whenever the news hits. Generally, I'm live anyway at around 2:30 p.m. Central European time. So if we then look at the probabilities, then the probabilities are highest for the bullish scenarios where price is at a given moment going to take out this high, and we are looking for a corrective structure to the downside. On the number 2 spot, we then have the bearish scenarios where a significant high is made and you're looking for impulsive structures to the downside. But as explained during the video, probabilities are lower for this to be some form of impulsive structure. It's higher probability for this to be a corrective structure. And that is what you like to see in the bullish scenarios, being the multi 1-2 as well as the unfinished diagonal. And in the live stream later today, 2:30 p.m. Central European time, we're going to zoom into the lower time frames as well, and I'll show you some of the counts that I have there. So thanks for watching. Hopefully this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.